Hi, this is Ben, and this is your Belmont Math and Science Center tutor tip. So today we're going to be looking at how to journalize sales transactions from two perspectives. We want to be looking at how to put in journal entries as a buyer, as someone who buys something in a sales transaction, and we also want to be able to journalize it from the other side, from the seller's perspective. So this is doing these sales transactions is the very basic level of your intro to accounting classes, but it's important that you get to know this really, really well because everything else builds on this in one way or the other. So hopefully we can get a good foundation on this and then be able to build from that as we go along the semester. So we're going to look at the same problem, but just do it 3 different ways with a little twist to each one. And we will add a little something to each problem so that we can learn a new concept. So the first thing that we're going to do is this problem right here that says on May 1st, Apple sells iPhones to Belmont for $10,000. Belmont buys the phones with cash. The phones cost Apple $7,000 to make. Alright, so we got our information. The first thing that we have to do whenever we do a journal entry is we have to put our date. So it's May 1st, right there. And the next thing that we have to do, and we're going to start doing this from Belmont's perspective as the buyer, we need to figure out what our debit is going to be. So Belmont is getting an asset in these iPhones, and we could probably put that under like inventory or equipment, whatever we want to do as an, or categorize that as an asset. I'll categorize it as office equipment, but again, in other problems, you might do this as inventory because we'll say that Belmont is buying these phones for its teachers to put in their office. So we're going to have office equipment for $10,000 because that's how much we paid for them. And then we will do cash as our credit because we, as it said in the problem, Belmont bought these phones with cash, and a credit to cash means that our cash in our assets will decrease, which makes sense. So we will transition to the Apple side of this. So again, April 1st. Our debit here, though, is going to be cash because Belmont is paying us $10,000 for these phones. And then our credit is going to be to our first credit will be to sales. And that will be for $10,000 as well because we did a sale of $10,000. So with the seller's perspective, we can't just stop here like we did on the buyers. We have to keep going. And the reason why we have to do that is because we have to take into account how much it cost Apple to make these phones. So it says $7,000, so we're going to do cost of goods sold for $7,000 because we need to expense off the amount that it actually cost us for Apple to make these phones. And then we're going to do a credit to Apple's inventory because there is going to be $7,000 less of inventory in Apple's store after they have sold $7,000 of phones to Belmont. All right, so hopefully that makes sense, and we're going to move on to this next problem. So it's the same concept. On May 1st, Apple sells iPhones to Belmont for $10,000. Belmont buys the phones on credit, though, instead of cash, and the terms are N15. So that means that they have 15 days to give Apple cash for this payment for these phones. They basically are saying that we owe you, and we owe you the money until 15 days are up. So we will start in a similar manner. May 1st is the date, and we will again do office equipment for $10,000. But instead of doing cash, we're going to do accounts payable because Belmont owes Apple $10,000, and that'll be our credit. For Apple's perspective, going to be very similar, except we're going to do accounts receivable because Apple has not received the cash yet, but they are expecting to get cash from Belmont. So that'll be accounts receivable. We're going to do sales again, and we're going to do cost of goods sold and inventory for $7,000 as we did in the first problem. So very similar as what we would do if it was a cash transaction, but we are just using the account titles of accounts receivable for Apple and accounts payable for Belmont. So let's say that Belmont ends up ends up paying back Apple after 10 days. So let's say that on May 11th, they pay Apple back. So we would do a debit to accounts payable. So if you'll notice, for $10,000, so if you'll notice, that will completely erase the $10,000 that was credited in that first transaction. So you have a debit for $10,000 for accounts payable and a credit for accounts payable of $10,000. So that'll end up being exactly 0 after they do that. The credit will be to cash because Belmont is paying $10,000 now to Apple, and so their cash reserves will go down by $10,000. So on May 11th, Apple will receive that $10,000 in cash, so their cash reserves will go up, and they will credit accounts receivable because they no longer are owed $10,000. So like Belmont ended their accounts payable balance, Apple is ending their accounts receivable. They were owed a debit of $10,000 in accounts receivable, but now we credited that amount, so now the accounts receivable is 0. All right, last but not least, we're basically going to do the same exact thing we did in problem 2, but there's a little bit of a twist at the end. So Belmont buys the phones on credit. The terms are 110 and 15. So we just went over what N15 means, but what does 110 mean? So that means that if Belmont pays Apple back within 10 days, they get a 1% discount on the overall purchase. So how much would that be? We did that calculation right here. 1% times 10,000 is equal to $100. All right. And this problem also specifies that we're going to be using the perpetual inventory system and the gross method. So there's two different inventory systems that we could use. We could use the perpetual or periodic. Perpetual means that we're going to be updating our inventory throughout the year, every day, whereas the periodic means we're only going to be doing it a few times during the year at different periods, so to speak. And then with discounts, we can either use the gross method or the net method. The gross method means that the seller is assuming that the buyer is not going to take the sales discount, whereas the net method does assume that the buyer is going to take the discount. So we're going to use the gross method in this problem. So we're going to do the same exact first part, so we can just copy and paste this down. So May 1st, office equipment, accounts payable, all this good stuff. So what happens though if Belmont pays Apple back within 10 days? So let's say on May 9th, they pay back Apple. And so that means that they're within that 10 days and they get that 1% discount. So we will do an accounts payable of $10,000 like we did in the previous problem. But instead of doing $10,000 of cash, we're only going to do $9,900 because we got a $100 discount, which we saw right here. So what do we do? So now we have $100 of credit left over to balance this. So we're actually going to credit our office equipment. And this might seem a little strange, but the reason why we're doing that is whenever we buy something, we put it into our asset balance as what we paid for it. So if we paid only $9,900, then it should not go into our account balance as $10,000 worth of phones, because really we only paid $9,900. So we're crediting the office equipment by 100 so that the office equipment total balance is $9,900. So what do we do from Apple's perspective if Belmont pays them back on May 9th. So they're only going to get cash of $9,900, and they're going to completely end. They're going to zero out their accounts receivable, which was $10,000. So we're going to credit that. So that means that we have $100 left over to debit. So what we're going to do here is we're going to debit to sales discount. All right. So the reason why we're doing that is because Belmont took the discount, so we're using this account to justify completely zeroing out our accounts receivable. So guys, I hope this video helped you guys out. If you have any questions, I suggest emailing your professor about this topic, or if you need any more help, please come in to see us at the Math and Science Center. We are more than happy to help you. All right, thanks guys.